Any sinner is capable of being a great saint. And any saint is also capable of being a great sinner, a great sinner, a great sinner. The secret, therefore, of character development is the realization of this power that there is in each and every one of us. Good and for evil, good and for evil, good and for evil. The good Lord would have us lay hold of what is worst in ourselves. Do not think that people who have virtue and kindness and other great talents just came by these things naturally. They had to work at them very hard, at them very hard, at them very hard, at them. Any sinner is capable of being a great saint, great saint, great saint. And any saint is also capable of being a great sinner, a great sinner, a great sinner.
Welcome, welcome, welcome. What is going on, family? Guys, it is March 22nd, 7:05 p.m. Eastern Time. Welcome to Digital Goats Academy. I am your host, the Digital Goat, guys, where we show you how to pretty much navigate through foreign exchange. So whether you don't know what it is, whether you do know what it is, guys, this is the place for you all, if you're tuning in my channel, to come and learn. And, you know, if you already are trading, get some more knowledge, you know, extra stuff. Add in some extra stuff, guys. So welcome, welcome, welcome. Like I said, let me pull up today's class. Today's class is going to be Fibonacci retracement, guys. Fibonacci retracement. So For my guests that's on Zoom, I just muted you because we are live on YouTube. So just wait till I go through my coursework. Wait till I go through my session. And if you got any questions, you can take yourself off of mute, bro, and then ask your question. So this is advanced technicals, guys. Whether you know or don't know, it doesn't matter. It will relate to you down the line. So even if it's like way over your head, this is still good information for you guys to know. So let me pull up my screen. Like I said, we're going to be talking about Fibonacci. Hold on. Hold up. Okay, I'm assuming that everybody can see my screen. So Fibonacci, guys. This was a big topic within my own community that everybody was asking about, like what is Fibonacci, how to use it. So I'm gonna break it down with 2 slides, and then I'm gonna show you guys actually on TradingView how to set up Fibonacci. Now I'm gonna go through because the only difference is with mine is that I have my own personal setup, guys. So there may be other people that use different numbers. So just understand that I use my own numbers, but I do feel like my numbers are more universal than everybody else's. So let me go ahead and break it down, and then we'll get into TradingView, guys. So if I'm breaking it down how I personally use it, then one would say it is a measurement. Fibonacci is a measurement that allows you to determine the percentage of rebounds or spikes, rebounds being buys, spikes being sells, before going into the direction intended, guys. And I have an example. Well, I have an example from investopedia.com that gives a definition that foreign exchange traders, like how they use Fibonacci. And I thought that was cool to use. So Forex trader use Fibonacci retracement to pinpoint where to place orders for market entry, taking profits and stop loss orders. Fibonacci levels are commonly used in trading to identify and enter off support and resistance levels. So there are need to knows with you when using fib retracement, such as using this tool can only be accurate when the market is trending, guys. So there are like conditions and rules that go to Fibonacci. A lot of people, they just get the numbers, how somebody else sets up their Fibonacci, not realizing there are rules based off of the percentage that the market retraces, guys. So this will not put you in the right direction in the market. Fib doesn't put you in the direction that you need to be in the market. You've already made up the direction that the market is going, and you're basing your fib off of the trend direction that that market is taking, whether it's up or down, right? It can be used for entry, take profits, and seldomly stop losses. Now, I personally said seldomly stop losses because sometimes, depending on the time frame that you're measuring the fib, you don't want to use it on a daily time frame, guys. And like I said, this stuff will make sense when I'm showing you TradingView, but you don't want to use a stop loss from Fibonacci on the daily time frame. Why is that? Because that stop loss, depending on the pair that you're trading, it could be like a 50 to 100 pip stop loss. And if you're anything like me, I don't try to lose no more than like 2% to 3% of my account when I'm trading. That amount of pips for a stop loss, that will definitely go against my own personal rules, unless you're trading less aggressive based off of your lot size. But again, guys, I don't recommend it. But yes, when you're looking at those smaller time frames and your fib lines are closer together, you possibly can use it as a stop loss. I have used it as a stop loss, but I don't recommend it. But as far as like entries and take profits, oh yeah, definitely have at it, guys. More accurate on a higher time frame, like 1 hour and above. Just so like anything in trading, guys, right? So the higher the time frame, the truer the direction, right? So fib only works if it's in the trending market. Now there are strategies, I hate using that word, techniques you can use your own, guys. You can use your own to make sense of how to use Fibonacci within like a ranging market. But again, you would still probably be finding like a trend. So you can't use it unless the market is trending. I don't recommend using it for a stop loss, but definitely an entry, take profit, guys. And obviously, the higher the trend, the truer the direction. So if you're using fib on, 1 hour and above, like I mentioned, guys, that'll probably put you more accurate. You just have to scale down on the smaller time frame to try to pinpoint it as accurate as possible, guys. Right. So this is how I exactly have my own Fibonacci set up, guys. Right. And these levels or these percentages mean something, right? So I know there are different percentages that people use out there. That's the one thing that I was going to go into, where people use like the 88%. I've been known to use that. I've heard that's probably a more accurate than like the 786, the 78.6%. I've heard of 71. I've heard of 25. You see, I use 23. I've heard of different percentage numbers that are about the same on how I'm going to explain it to you guys. But again, each trader is different themselves. You know what I'm saying? So if we're just going, imagine, we're looking at the market and it's going up, not even to make this complex. Because again, we got newer people that's joining my call on YouTube and on Zoom. So let's just start as if our starting point on an uptrend is at the bottom, right? So we're looking for the market to continue up. It's already up, but we're looking at a pullback or a retest based off of the percentage that the market traveled, right? So you're going to see it live, guys, but zero would be your starting point, right? So if you look at zero, should be around like a previous low or a previous high or a lower high. I mean, a higher low or a lower high, guys. The reason why I say that is because you're pretty much marking up your fib from high to low of a trade, right? So depending on the time frame, your high to low may be different, but you can measure them, on higher time frames, smaller time frames. But just understand your trend has to be a high point and a low point that your fib is touching, not necessarily a strong level of resistance and support, knowing that that's all over the marketplace. But we're talking about in the trending sense, because we know more than likely if it's trending up or down, it might not have created support. I mean, it came from that, or it came from resistance, but as it starts trending, it's just creating those sequences of higher lows, higher highs, lower highs, lower lows, guys, right? Well, lower lows, lower highs. So 23.8, right? Or 23% if you just want to break it down and round it off, right? Opportunity for shallow retracement. So I didn't add much. I didn't add anything else to that, guys. It's just that normally I see this move like after the market has had strong momentum, but also like where the market starts moving sideways. Normally 23% is where the market starts ranging. So if you ever find yourself like drawing your fib and you're looking for a potential sell and you see that it places you like the market has rejected your 23%, more than likely it's going to start consolidating after that. That's just my own sentiment, guys. That's not a guaranteed, but it's more of a shallow retracement, meaning that the trend, in my opinion, is weak, right? The trend is pretty much weak. You can't guarantee because that market is moving sideways, but you guys will see. So 38.2%, right? Confirmation. Oh, that was supposed to say, confirmation for trend, right? So confirmation for trend. When you're looking at the confirmation for trend, you have a shallow retracement for the 382 as well, guys, right? So that's a confirmation for a strong trend, That thing bounces off the 382. You can almost, I wouldn't say guarantee. I don't want to say guarantee because I don't like using those words when they come to this market because it's a risk. So 382 almost confirms, that's the word we're going to use, confirms that your trend is strong. Understand if it hits the 382 and the market takes off up or down in that direction, when it returns back to that 382, it's going to blow through that. So it's creating a strong trend because it no longer wants to do its basic like retest. The market is pretty much saying, I'm going in this direction. And if I come back to you, I'm not retesting that time. I'm actually going to blow through you. But again, that goes into, is there structure? Is that truly a trending market? Things that, variables that you guys are going to have to use when you're in front of the trading screen, right? 50%. 50% is common price retrace, a common area price retraces to, right? Hold on. Common areas that price retraces to, right? Price normally returns 38 to 50% for a correction to continue the trend. Normally, 50, can you guys mute?
He sent out racing. Okay.
All right, guys. So 38 to 50%, that is guaranteed. I'm not saying that the market is guaranteed to return to those. Well, no, I am saying that the market is guaranteed to at least return to those positions. I'm not guaranteeing that when you see this, that's where the market wants to, like, that's the buy entry or the sell entry. But you can bet your butt, guys, that at the minimum, you will see the market come back to 38 to 50% as long as it's created a high and a low in the market. It hasn't created its true high in the market. You could be early on your fib retracement, and you guys will see 618, right? 618, known as the golden zone in areas traders look for, right? Traders literally look for this area for the market to return to. Now, this is something that I would almost say guarantees, because at this point, you're looking at a deeper retracement, guys. You're looking at a deeper retracement in the market, which almost guarantees that the market has given back a percentage to continue in that direction. Again, this has to be a trending market. So if you find it that it blew through the 618, we obviously want to look for the next levels and stuff to see if the market is actually going to bounce off of those. But at the same time, more than likely, if it goes past your 618, the trend is probably reversing, which brings me to my next point. 78.6, right? Now, I don't know too many people that use it. I think a lot of people use 75 or 71. Now I use 786. I think that's an original template that when you start TradingView, it gives that out to you. But that's a reversal zone, right? A reversal zone. So when price reaches here and it closes above or in your zone, like with the candle, I'm not talking about like with the wick rejection. It closes with the candle. More than likely, it's going to retest down a little bit further, but that market has pretty much reversed the trend. So if you're buying, it reaches and you're looking for a pullback on the sellings, like you're looking for a pullback. So the market is selling back to a buy position and it reaches 786 and it closes as a candle. More than likely that market has reversed on you guys. So if it starts reaching that 786, it can reject it. I'm not saying that it can reject it. Everything is subjective in this market, guys. So you have to be in front of the computer, make the decision based off the trend of the market, based off of higher lows, things like that. It's not that complex because when you just add basic structure to the market, it's like, oh, this was a previous high. Oh, man, this was a previous low. You'll just see that it happens to be around that 786. Now, if the 786 is still continuing the trend is not that strong, but the trend is going to continue in that direction, probably to meet another level of resistance or another level of support. But if it reaches here and a candle closes, it's probably reversing. Again, look at different time frames to see, so you're not tricked by the movement that it's doing on a smaller time frame. You're like, oh man, this thing closed on the 45, but if you look on the 4 hour, it was just a wick. You see what I'm saying? So it could have a wick rejection, fool you, and then, completely reverse on you. This market will probably retrace all the way back to the low or high it came from, right? 100%, that's a full retest. That's the market basically targeting levels of support or resistance. I'm talking about strong levels where it's like, it wasn't blatant to you on the smaller time frame, but when you back up to the higher time frame, it's like it makes sense. Now, at this point, it's up to you to discern how many times that market has been at that resistance, how many times that market has been at support. Reason being is because none of this gives you the answers, guys. It just puts you at a little bit more of a probability rate to be more accurate in your decision making, so you can be in less drawdown or get these sniper entries that you're looking for. But nothing is guaranteed. I want you guys to understand that when you're using Fibonacci, but it helps you, it puts you at a better place and gives you more data from the market than it would be if you were just using, basic lines and stuff like, oh man, it's going to break out of here. I want to be as accurate as possible for me, pretty much. So if I can get it down to like a tenth, like a tenth of a decimal, guys, and it puts me literally in drawdown like a pip, 5 pips, which, that's like a sniper entry. Yes, I'm looking for that. And Fibonacci puts you in those realms. So yes, it is a valuable tool to use. You know what I'm saying? I'm not overhyping it or overselling it. It is a valuable tool to use, and it does put you in the right place. And even if you're wrong, it still gives you enough data on the opposite side. Oh man, it broke through these levels. Well, what do I do now? Now I got to wait to see, based off of my fib, to see if the market returns back to where 38 to 50% of now that I'm on the opposite side. So if I was looking for a sell, market blows through that, hits my stop loss or whatever, or maybe I'm not even in a trade, but now my bias is off. More than likely you're in the trade, your stop loss got hits. Don't worry, look for the retracement, because now I can draw my fib in the right direction as long as it's trending. This will not work or not be favorable if you don't have enough experience, if you find yourself trying to use this during consolidation. Remember, consolidation can happen on all time frames, guys. So if you find yourself, I'm not talking about a range in market, which is like a bigger form of consolidation. You can still use that, but you have to acknowledge that the market has to bounce out of these areas. You know what I'm saying? So you have a high and a low that the market is pretty much bouncing in between, and you're pretty much scaling, you know, using the part where the market is making the trends on the smaller time frames. Whether it's a monthly, you could do this on the monthly, daily candle, weekly, you know what I'm saying? Like, and I'm just talking about using it for fibs. So having a projection of where the market may return. And as I mentioned before, guys, my numbers may not correlate with the next trader that's out there. I don't know what everybody else is using, but I'm sure their numbers is pretty much close to this, or they have something of it. I know people have a 0 on 100%. I know people have a 50%. Outside of that, I'm not sure if somebody has a 38.2 or a 23.8 or a 78.6, but I know traders use 50%, a 618, 100%, and a 0%. You know what I'm saying? Outside of that, it's whatever you guys want to use. So now I'm gonna show you guys how I use Fibonacci. Matter of fact, one of my partners, we actually use this. This is kind of advanced because it was actually like something that I was like experimenting with myself. So let me go ahead and switch to my screen, my trading view screen. This doesn't guarantee that this market will do this in any shape or form, guys. But I'm gonna show you the example that we use. I think we still got it, bro. I'm not sure. Okay, you guys that's on Zoom with me, you guys, if y'all want to conversate and stuff while I'm going over this, y'all free to do that now. Just let me kind of, like I said, finish this part, and then y'all free to talk if y'all want to. I just had to get through that part. Also, my YouTube family out there, guys, make sure if you're viewing my channel, you hit that like button, that notification bell, and subscribe. I know a lot of you may need some reminders on that. Seeing such amazing information, you just lost, you probably made a couple of dollars. So you just excited, you forget to subscribe. I understand that, guys. No harm, no foul. Just make sure y'all hit that button on your way out. Drop a comment if you want something to be touched on, guys. Like I said, we have a community that we're building, and I would love to connect with more traders out there in the world. So wherever you're at in YouTube, connect with me, guys. I got something for you. But anyway, weekly time frame. This is US oil, so this is something me and my community actually did. And yeah, man, it's looking like it's actually going to reverse back up there. But anyway, just focus on what you're seeing before you, guys. Now, I already have my fib up, like I told you. Now I'll make it a little bit darker. I already have my fib levels already up. Now, this was something that we were experimenting with US oil, right? Now, I know you see these zones here and these lines. You're probably like, well, what does that mean? Now, I'm going to show you guys real quick, but understand, this is the entire move that I'm fibbing. You can do that. I'm fibbing. That's funny using that lingo. But anyway, you can use this. You can use this on any high and low to get what you're looking for, as long as you know what you're looking for, guys. All right. So for example, if I wanted to know, and again, don't look for the answers by saying, oh, this market should return here. It's wherever this market returns to, and that's your answer. So for example, right, this move down here from oil, right? This down move of January 27th, the beginning of this year, right? All the way down to February 6th, all the way down to February 6th, right? Now, what I'm concerned about is the move up, because that's where it bought up, right? Just to kind of give you in real time. Now, this part is ranging. So if you just draw this box up, this is a perfect example. I'm glad you pointed me to here, Gray. So this is a ranging market or consolidation, however you want to say. This is a ranging market, guys. You see how it's not breaking any levels until it broke down here, right? Ranging market, right? So with us knowing that, we still got trends in the market though. This is an 8-hour time frame, custom time frame I use, but we still have trends in the market. So if I just go, if I didn't have any of this information right here, right, and let's actually make it like it's real. This is the only information that I have. Oh snap! Can y'all not see the chart? My bad. My bad. Y'all better say something. I'll get lost out there. Can y'all see the chart now?
See, amigo.
All right, bad. My bad, guys. My bad. So let me walk that through again because I forgot to. So this is a ranging market right here, where this box is at. This is what I was talking about with like consolidation. Oh man, it even lets me know that the participants can see the application now. That's funny. Anyway, this is a ranging market or consolidation, whatever you want to say that, makes you go to bed at night easy. All right. So you see this market finally broke down. It finally broke down and now the market is actually moving back up. Right. Well, in that range, there were trends. There were up trends and down trends. Right. Let's point them out. Got an uptrend right here. Right. Definitely. Got a downtrend right there. And this is an 8-hour time frame. So it's like big movements. You got an uptrend right there. Got a downtrend right there. So forth and so forth, guys. But y'all following me. You see, these are still trends within the market. Now, here's what we have to do. Say I started right here as February and we didn't have all this information. But again, I know based off of what we just learned, what is supposed to happen when the market comes back to these zones and bounces off or spikes down with a close, right? I know it's supposed to happen. So I have to move the Fibonacci tool in the direction that the market is traveling based off of what I believe, right? Now I can clearly see that right here we're downtrending, right? But based off of this sequence, if I believe that this market is still going to buy up, or come back up here, this is the trend that I'm looking for, right? I do have a high now. So if you just turn it to a line chart, you have a high and you have a low. It probably need another high. Like, so for example, you see how you have a high right here, you have a low right here, you have a high right here, you have a low right here. Not rocket scientists. I mean, rocket science, you know what I'm saying? It's pretty straightforward. So if I'm looking for the trend, to pretty much continue in the buy direction, I need my 100% to go all the way up to zero or whatnot. I know that may confuse people, but what we're looking for is, because I identified that it's in an uptrend, I want price, if this was my high zone, I want price to drop down to one of those areas that we talked about. So kind of like this, guys. I'm sure it's something like this. Whatever area is going to be, let's just say 50% for, just example, demonstration purposes, right? Now, I don't say that, I know price is coming down to 50%. I say that if price comes down to 50% and shows signs of reversing, then I'm overall looking for the market to continue up, because I know that no matter what, this market retests 38 to 50% of a prior movement being the minimal. We're not saying this is the guarantee. The guarantee is really 100%. This market is guaranteed to go 100%. Like eventually, you know what I'm saying? But what you're looking at is how far the market returns back down before it starts coming back up, if the uptrend is valid. But right now, we don't have no reason to believe it's not an uptrend. Why is that? We have to apply the basics into the market. Well, why do you believe it's an uptrend, Antoine? Well, we created support right here. So I have to respect that the market is respecting the rules that govern the market, which would be support right here, right? We actually have a previous high and the market creating support. So why wouldn't it want to retest, I don't know, 618? You know what I'm saying? Unless there's like previous highs down here. Now, guys, what you have to factor into, like, don't even use fib until you've done because all you're gauging is like how far the market can return back down. So don't use fib well, I guess you can use fib to find your entries and exits and stuff, but in my opinion, don't use it until you've done your basic analysis yet. So it's like, have you identified a previous high? Have you identified support or resistance, an area that the market can return to? Then use your fib and be like, oh, wow, man, my previous high is where 618 is at. So this is a previous high in the market right here. I just know it is, right? I don't have to scale down. I just know. You know what I'm saying? This is a previous high in the market, right? I would probably be more likely to expect the market to come down here. But before the fib, I won't know until the market does this, but I can expect like, hey, man, this is an imbalanced candle. Hey, man, this is an imbalanced candle right here. I don't really like this retest. So I think that the market may come back. And then if you look right here, even though it's a wick, that has created support when the market does return back down here. So I want the market to come back to a better buy zone instead of me being pretty high up. You know what I'm saying? Because what if it decides to, everything's like a what if. It's not like, is the market doing this until you see the trend? What if it decides to, because we're at resistance? The only reason why I would think that it's pulling back is because we're heading towards a level of resistance. You know what I'm saying? So that would be one of the reasons. Again, you have to already know the basics of trading to even apply Fibonacci. You don't know support and resistance. You don't know how to identify previous highs or lows in the market. This will work against you, I promise you, because you'll be searching for the wrong information. But let's look and see how far the market traveled before it actually started coming back up or went down. Let's see. Okay, y'all can pretty much see, jump to real time. Y'all can pretty much, oh, I didn't even see that. I'm glad I paused right there. Look at that. Look at that. But here's the thing. If I had jumped the gun early and pretty much was like, I'm gonna do 50%, right? Look how far this market traveled. How far did this market travel? Even though we see previous highs, because there's information that we don't recognize because we're so busy trying to make the money. If I would have been more patient, you know, because this could have been a real scenario. If I would have been more patient, I would have saw what? I would have saw this candle right here and been like, nah, man, I need a retest here. I need a retest here. I don't know. I need like at least 382, right? Look at this. I don't even know if this did bounce off the 382, but I'm almost sure that it was like around that zone. Watch how crazy this is about to be, because we can't see the other side yet. So let's see the other side when it does that. Make it nice. This is pink, right? So let's see. Shy of 382 of this candle. You know what position this market respected to buy up? The position, well, the percentage that we don't normally care about. Wow, how rare. That's very rare. You know, 236 shallow retracement. Like I said, shallow retracement doesn't guarantee anything, but you see the market actually came down 23% of this candle. Now, I don't want to confuse you about like the overall trend, because I use Fibonacci on candles, because if you break down a candle on a very small time frame, it's a what? It's a trend down. It's a trend up. Let me see. It's a trend down. It's a trend. Oh, 20. Yeah, right. Michael Jordan for sure. Right. It's a trend down. It's a trend up. Right. So even if I would have missed this move, because I would have been maybe anticipating it to come down a little bit lower, you saw it broke through the 786. This is a perfect example of what I'm talking about, guys. A perfect example where it's like, now the trend is not strong to the upside, but the trend is still there. with this 786, I know that when it hits resistance, I could have a reaction. I don't want to say it's guaranteed to do anything, but a reaction, guys, right? So where was I going? Hold on. 238. Oh, I was just emphasizing. You see how we're on an 8-hour time frame. You see on this 8-hour, that's a wick, right? Look at this. This was a wick. This market came back up, and this market came back for this wick. So when I'm talking about the 786, and as far as like a revert to keep the trend in that direction, if I was still looking for buys, I need a candle, not one of these. Now, one of these popped out, this wick with a candle that closed around that 786. So what was it in layman's terms, right? You don't recognize it because when you see it on a line chart, it's not showing you like necessarily what you want to see. You know what I'm saying? Because it has that market moves so fast that the data didn't capture it, right? Well, the computer didn't capture it. But all it is this, guys. All it is this. Break. Retest. Doesn't look like that when you're so gun-ho on trying to make the money instead of just calming down a little bit. Break and retest, guys. Break and retest, right? Because when I turn it back to a candlestick chart, I can see that the market bounced off this. Watch. How hard is that to identify? Knowing that now, yeah, I get it. In this 8-hour time frame, I'm sure everybody would have been sweating bullets. But when you calm down, back out to a smaller time frame, you see that, oh man, this thing did actually bounce up. And now we're at a level. Well, this was the break. This was the retest that wanted to push the market. Or that's how it got so aggressive, basically off of this wick. So this almost guarantees, because we're at 786 of this trend. It's a ranging market, but we have to let the concept of the Fibonacci go when we hit back up to this high, because now we're at a range. You see what I'm saying? So let's finish out the market and see what it did based off that information. I mean, we know what it did, but I want you guys to see, what transpired. Boom, boom, boom. Remember, this is our level of resistance. Somewhere up here. It's either going to be a level of resistance or a previous low in the market. You see this? This was a previous low in the market, right? Ooh, nasty, right? So if you look at this area over here where my cursor's at, now we're all the way back down here, right? All right. Broke through all of that structure. All of that structure. Y'all see that? Broke through all of that structure. Now, I'm not going to do like a break and retest class, guys. But if you see this market, that's why, again, the closer it gets to the top, you have to analyze where this market is trying to reverse at, right? And like I said, if it didn't hit resistance, it is still gonna, because this is a trend now. This market is trending. When this market came up to this previous high, on previous low, excuse me, sold off from there. Hard body too. Sold off from $80 a barrel. Well, really, I mean, if you're being precise, $80.71, right? But more than likely, as a trader, you're going to be somewhere probably like right here. You know what I'm saying? In the ballpark. And let's see how many pips like that was up if you would have went and draw down 20. Yeah, that was about 20 points. That's not bad. You know what I'm saying? That would have been $20 gone if it would have hit your stop loss. But $2 on a 0.01. I'm thinking from the 0.1, $20 gone, right? Based off of, again, respecting the rules in the market, guys. But we are at resistance. We are at resistance right here, because if you just draw this out, factor all that in, guys. That's still resistance. It's up here. This is resisting. This is resisting. But when you saw that there was a wick up here, more than likely the market's going to rise higher to actually create some type of structure, then move itself down. Now where we're currently at, what I did was, now that I use that information, what well, I was just giving you guys the example. But now that we showed that example, looking from the high and the low that the market made, the market, and I do capture the wicks, guys. I don't just go structure to structure like how most people teach you, or body to body. So most people talk about like Fibonacci doing it. Like I want to capture everything. They'll do it like this, but I feel like that's misinformation. For me, that's misinformation because the market actually traveled lower than that. So I like to capture all the wicks, but they actually teach you to do it body to body, but I rather do it like wick to wick, right? So I get the highest point the market traveled, the lowest point, including the wicks, guys. So now that I drew the fib out, extend it all the way through, just so you guys can see it. Now that we see, and the reason why I have 100 on the top and 0 on the bottom is because the market is trending down. I know the market is coming down. It broke through the structure. So I don't know where it will return. I mean, you will when you start actually breaking it down to a smaller time frame. But I don't know where this market will land before it starts continuing in this direction. But I know it's going to head to one of these zones. I know it's going to head. It already blew through 23%. It already blew through Michael Jordan. So I know its next zone that is going to head to is 38%. But where is our previous low at? Wow, man. Our previous low or structure where support was at is 50%. Now, again, guys, I don't want to get you too like gun-ho on like the 50% concept or whatnot, but you need to at least be looking for 50% instead of like the 382 or the 236. You need to look for 50% because the market more than likely will come up here, then come up here, then come up here, and that'll put you at a better range for like decision making for your entries and take profits. But where's our 50%? Previous low. Get what's above that? 618. Wow, it would be crazy if this market went up to 618 just to come back down and create support and then pop up. I'm just saying that hypothetically. I don't know if that's what's going to go on, but we're currently at 38.2, which validates a what? Strong trend. If this market started showing signs to reject from here, more than likely it's going to continue hard. But when it comes back up here again, it's not retesting it no more. It's blowing through that, right? 50%, same thing. You still have to, again, apply your logic as trading, guys. Any bounce that it does and then comes back down, you have to pretty much say, I'm going to stop right here and then look for an entry if it shows me continuation, all right? Now, the cool thing that we did, that I have all these purple lines that you guys are probably confused with, what I did was I matched up when the market started dropping the most, right? So it was up here. And again, I measure candles with the fib because what I want to do is know based off the high and low of the market, like how aggressive that candle is. So what percentage that the market return. So look, this market came, oh no, right here, because that's where it dropped. So this market, if you look, it's kind of hard to see with all this confusion. Well, how do I don't know. So this market came 786. This is the 786 line. I know it's extending far, guys, but this is the 786 line. That's why I put this purple line that says what? That says 786, because this move to this move was a high and a low that the market needed to retrace and then come down. So I gathered that information and I saw that, wow, man, just in that sequence, the market traveled 786. Now I moved my fib down, and where did I cap? See, the market looks different now compared to where it was. But basically, how I showed you guys, like it was on the 4-hour time frame. Oh no. It was on a 4-hour time frame, and every time that I was measuring, like because the candles look different now that there's more data. But every time I was measuring these candles, because it was big candles on a 4-hour time frame, and I was watching where it pulled back, the next move was 618. And then the next move that I fibbed up was 50%. So I drew these as the market was coming down. It was retesting these areas while coming down. So that led me to believe that, okay, the next area that we're going to have for a potential sell is 382 before we start coming back up. What did this market do when it came back up? And one of my friends, one of my business partners, they're on the line right now where we watched this happen. We called this out and we watched the market actually tank from there, right? Now, at this point, we did this based off of like the individual candles. You can't treat that the same way as like because now it's going to make its bigger move. Yes, each time frame you can use fib on a candle and stuff, but don't forget the whole move. The entire move still has to come back these percentages too. And where we're at currently, 382, right? Well, more than likely, we're probably going to push up to at least 50%. At least 50%. This was a previous low. I'll be surprised if we broke from here, but if we broke from here, then we're definitely continuing downward. But when we come back, we're blowing through all this, you know what I'm saying? So I can see that, and we're pretty much going to analyze that tonight. But yeah, guys, like I said, like this was our Fibonacci training. I hope that helped. What I'm gonna do real quick is that I'm gonna click on this so you guys can take my parameters real quick for everybody that's on the call or on YouTube. So I'm gonna leave this up for like, I don't know, like 10 seconds, 20 seconds. Take a screenshot, whatever you need to do. Use this the same way, and I'm gonna scroll down so you guys can see how I have it. You don't got to use the same colors. That's my own design. You can keep it black or whatever you want to do, but look at when you go into your own fib settings, look out how everything is. So take a picture of like each of these like boxes that I have, not each of these boxes, but each of these windows as I'm scrolling down, because as you see, if I turn this all the way up, you'll see how you guys Fibonacci starts. Y'all probably are like, why does my fib look like this? You have to turn it, you have to pretty much make that background disappear. I got levels, so my levels show me, you see that? It's showing me my levels and I have them in percentages. You can do values, you can do percentages. I just think percentages is just grammatically correct because the market is returning a certain percentage versus you just having the values and somebody sees a decimal and they know they did bad in algebra and now they're confused like shit. You know what I'm saying? So turn it to percentages if decimals are gonna hurt you. You know what I'm saying? I actually rather just to see it as a decimals, but again, I used to have them as, I actually rather to see them as percentages, but if you want to have them as decimals, knock yourself out. But this is what it would look like. And again, if you struggle with decimals, then you just turn it to percentages. The percentages just make sense, right, guys? So yeah, man, I'm about to jump on with my team. So appreciate you guys today. What is that? Man, we almost did the full hour right there, yo. That's what's up, man. So no live trading really today. This was a class that I had yesterday that I couldn't tend to, but I wanted everybody to be able to use this. And I'll probably just peek at something real quick. Let me just look at gold because we were talking about that. So I'll give you guys my expectations of gold. Gold did exactly what I wanted to see, right? So again, well, no, this is for my personal team. Consolidation right here, guys. I know what we've always talked about. The market consolidated, then pushed down, and now it has a breakout. Now we know that the market will probably do what? Make its way probably down here if the move isn't strong to the upside. But again, guys, same thing if we're still using fib in real time. All I'm using it for is to collect the information, then make the move when I feel comfortable in a certain area. So right here, all I'm doing is measuring this candle, right? All I'm doing is because I want to see how far this candle may travel before bouncing up. It's showing signs of rejecting 382. That means on the 4-hour time frame, if this candle turns blue or green, whatever you have, and it doesn't, like the next candle doesn't try to come back down here and pushes up, more than likely that trend is strong. But again, guys, when it meets a level of resistance or whenever the market decides it wants to collapse, because it did a 382, it's going to blow through that. You know what I'm saying? It's going to blow through it on the other side. So we would rather see, we want to see the 382 because when it blows through, the market is going to continue in that upward direction. So we want to see 382 to 50%. The market retraces like all the way back down here, 618, 786. oh yeah, once it hits this resistance, well, once it hits another previous low or something like that, this market is probably coming all the way back down. So yeah, guys, use this information wisely. I am bullish on gold. I've been bullish on gold this entire day, even after the FOMC meeting with Jerome Powell. They didn't really say anything too alluring today, guys. It was pretty quiet in the market for the most part. It was a lot of consolidating and then breaking out. And again, for the break and retest trader, they should have loved today's market because it gave them everything that they needed to see if they were just patient enough to wait in the market. So I am bullish on gold. You just want to find out where your pullbacks are. Again, guys, break it down to a smaller time frame, turn it to a previous low and see like where these previous like moves are. So again, this is a previous high. If the market decided to come back down here, it would be no shock to me. And it would make perfect sense. And if it bounced off, I know that by the time it gets up to this resistance, that market is probably reversing because it'll probably hit like 786 of just this move right here, not the overall. So this is what I'm kind of talking about, where it's like we have our move, but we don't have the rest of the data because as the market starts to move up, this isn't the true high until you start seeing it pull back more. So it could be like up here and then the market pulls back, wherever the case, you know what I'm saying? This isn't a complete move yet for you to use your trend. You can use it now, but if it breaks above, it's like, oh, okay, this trend is still continuing to the upside and it hasn't really rejected to create a high in the market yet. You know what I'm saying? This is a high, but it ain't the highest high this market can make yet. You know what I'm saying? Like out of this current trend. Blah, blah, blah. So yeah, guys, that was it. Appreciate y'all. For my YouTube subscribers, always thank you guys for my support. My Zoom team, you already know I love y'all, man. Always remember, guys, hit that subscribe button. If you forget, hit that subscribe button. It definitely helps with my Patreon, definitely helps for the community. And again, if you guys are looking for a community or you're looking to grasp the concept of trading, reach out to me on IG at the digital underscore ghost. Let me type it out real quick for you guys. I have 2 IGs that you guys can use. So this is my first one, the digital underscore goat. Then my second one, which is more of my business page for the community, is digital goats. That's with a Z. And I do have a Facebook, which is digital goats. So if you guys are looking for a trading community, you can reach out to me on those platforms if you choose to. Again, guys, it's for experienced, non-experienced traders, guys. If I had more experienced traders, I definitely would love that. But if you're still new to the market and you're going to be intimidated by pressing the buy or sell button, come join our community, guys, because we'll get those fears rid from you. I can't help you be like, you know, a superhero in the market, so to speak, but we can help you be more comfortable. You know what I'm saying? More comfortable because, again, we were once in your shoes, not knowing a damn thing about this, and then woke up to, wow, man, I can't believe I made $200 out of nothing. But anyway, guys, I will see you next week. Tomorrow I am going to do my market overview, but I'm not sure if it's going to be on YouTube. But again, if you're following me on YouTube, just make sure you guys tune in on Thursday. More than likely I will, and it won't be that long. So hope you guys make a bunch of money. Like I said, I believe that gold is still bearish. You just have to find your entry based off of fibs or based off of previous lows and previous highs of the market, and then ride that thing up. Hold on, blah blah blah. Academy, yeah. Well, now if they reach out to me, I'll push them towards it if they reach out to me, Gray. Appreciate you guys as always, and remember, see you guys at the top, because in 2023, which should be your Jordan year, we're taking everybody to the top with us, guys. So I'll see y'all tomorrow and Sunday for everybody that won't be on tomorrow. Peace out.